Ever since the halving, Bitcoin has had a pretty rough time. Now, we've seen the Bitcoin price largely move sideways after a post-halving bump. It went all the way up here to about 67,000 and just sold off completely. Now, I've been digging for reasons why Bitcoin has kind of underperformed so badly over the past couple of weeks. In fact, all the way going back into the start of April, we've seen a significant decline in the Bitcoin price. And this has come as other assets, such as the NASDAQ, have been up actually over the last week. Bitcoin has actually been down significantly, almost 6% in the last 5 days. And so you would expect that the Bitcoin price would follow the NASDAQ to a degree, but that's not what we've seen so far. And so I went digging and I tried to figure out what is going on with the Bitcoin price. And so I went back over to Apollo and Apollo's excellent Bitcoin ETF tracker. And I've started to notice something very interesting. And that is when you take a look at the Bitcoin holdings over time, you see that we've been largely going sideways over the Bitcoin holdings over time. Now, contrast that to where we've been at the start of January and February, where we saw large increases of the Bitcoin holdings over time. We saw large inflows to these Bitcoin spot ETFs. Now we're starting to see an environment where spot ETFs are either going sideways or they're actually losing significant amounts of money. They have significant outflows. If we take a look at the indicator of the total Bitcoin spot ETF net inflow or outflow, what you're seeing here is actually a large amount of outflows over the past month or so. We've seen significant declines in Bitcoin spot ETF interest over the last month, even though we've seen significant increases before that and about earlier, so March. But I wanted to go and dig even further and see what's causing these outflows over the past month. And so I went back over here to Apollo and I went and got rid of and started filtering some of the Bitcoin spot ETFs. And the big one, of course, is GBTC or Grayscale's Bitcoin Trust. And when you take GBTC out of it, you can see that when you take GBTC out or Grayscale out, the inflows to Bitcoin with these spot ETFs have actually been pretty significant over time and actually fairly steep over the past couple of months. But when you add in GBTC, now you start to see a little bit of decline, a little bit of sideways moving, and it starts to become clear what's going on here. So, and we can just go ahead and take a look at one day, April 26th, as a huge example of what's going on here. And they actually break out the net flows of Bitcoin. And so far, what we've seen is a significantly down day for GBTC, Grayscale's Bitcoin Trust, compared to the wider the other Bitcoin trusts, the other Bitcoin spot ETFs that are available, and they've made up a significant amount of the total net flows out of the spot ETFs. So that leads me to believe, and especially when you take a look at their total. The total flows daily and total to date here, you can see here that there's been significant movement away from Grayscale and towards other spot ETF products. And if we go ahead and take a look at the Grayscale Bitcoin Trust's total assets under management over the last, say, about 4 months, you can see that it went from about $29 billion or so to where it is right now at about $19 billion. So they've had significant moves away from where they started the year from. And if you go ahead and take a look at the GBTC discount or the premium to net asset valuation, you can see here that the premium, the so-called premium for Grayscale's Bitcoin Trust, has actually been eroding over time. And especially as we got to the spot ETF approvals, they've basically disappeared. They've gone from about 2% to where it is right now at about 0.18%. So about a pretty significant decline in the premium that Grayscale used to offer, and that's largely been due to the fact that the spot ETFs were approved, and now there's a significant amount of competition in the Bitcoin spot ETF space. And I think that becomes obvious once you start to take a look at GBTC and you look at the expense ratio here at 1.5%. So Grayscale has been charging people who buy GBTC that 1.5%, and you compare it to something like IBIT, and that gets you 0.12%. So it's actually a pretty large difference in in what they're charging people. And if you actually listen to Grayscale CEO's interview with CNBC, I think things start to become a little bit more apparent.
Becky, we've talked about fees. We promised investors we'd lower fees. We did. We've reduced by 25%. You have countless examples across the ETF space where you have category leaders that are not the lowest cost option.
No, but Michael, when you look at the screen, we just put up the fees for everybody across the board. You are significantly multiples higher than everybody else out there. Why?
Yes, because GBTC has differentiated characteristics. There are no assets in these other products. They're starting from zero. And GBTC, again, has that market-leading liquidity. It traded over $650 million notionally yesterday alone.
I know, but BlackRock is like the biggest of the big. If you're just looking about liquidity and where you have things backed up, like what, I'm really curious. Make the case for me why I should pay 1.5% versus 0 to 0.2%.
Well, we certainly did a lot of research around this. The market in the U.S. is just starting today. If you look at other geographies around the world, you have seen products that have fees that carry anywhere from 125 basis points to even 175 basis points, whether that's in Europe, Canada, elsewhere. So there are market precedents for crypto products as well.
So as you saw there in that clip, the Grayscale CEO was trying to make his sales pitch on why investors should pay more for Grayscale as opposed to their other competitors. And honestly, I just feel like this definitely falls flat, because if you have the GBTC and you put it up against iShares Bitcoin Trust or some of the other products out there, they're all designed to track the spot price of Bitcoin. And so they're all out to do the same thing. But at the end of the day, you're paying a lot more for Grayscale. So the fees have become a significant issue for Grayscale. And again, if we go back here and we just take a look at just Grayscale's holdings of Bitcoin, and we just go ahead and get rid of everybody else, now you can start to see a pretty significant decline in Grayscale's Bitcoin holdings over time. In fact, if you start here from the top here, from January 10th, and you go all the way down to where we are right now on the 26th, it's about 321,000 Bitcoin that has left GBTC and gone elsewhere. So right now, one of the primary reasons why Bitcoin has been moving sideways is because the investors that have gone out and bought GBTC, they're either selling it and taking profits, or they're moving over to other spot ETFs, such as IBIT and the Franklin Templeton Bitcoin ETF. There's just so many other Bitcoin ETFs that they could pick from that have a lower overall fee. And that's, I think, one of the reasons why we've seen such a large decrease in the Bitcoin price overall. Because as you know, when Grayscale, for instance, when they start losing these customers and they have to go and they sell, then when the customers sell the shares, Grayscale is required to sell Bitcoin in order to meet those requirements. So as a result, we actually start to see a decrease in the Bitcoin price, because now you have increased selling from Grayscale and there's not enough inflows to make up for it at the other spot ETFs. Now, Grayscale has, they know that there's something going on here. And so they've actually talked about spinning off their spot Bitcoin ETF. They've talked previously, according to Reuters, they've talked about coming up with a new investment product, which is the Grayscale Bitcoin Mini Trust. Okay. And it seems like that will be kind of a spinoff. It's probably going to wind up being lower fees, most likely, to try to compete. But just to bring this full circle, now remember, this whole thing started because Grayscale won a legal fight against the SEC tied to the approval of Bitcoin spot ETFs. And because they won that legal fight, that opened the floodgates for other companies like BlackRock and Franklin Templeton to go and offer Bitcoin spot ETFs. Now, it just so happens that they went and they undercut Bitcoin's they undercut GBTC's expense ratio and made their fees much lower. But GBTC is honestly in a world of hurt right now. They can't see such significant outflows from their products without feeling the pain financially. In fact, we've seen already that the GBTC competitors have surpassed Grayscale in the assets under management. And that happened back in March 11th. So that was almost 2 months ago. We've seen the competitors surpass them in assets under management. So this is a big deal for Grayscale, and it remains to be seen, if that mini trust is going to help them at all. But they've been hemorrhaging money like crazy. Like I said, going back to total assets under management for GBTC, they started at 29 billion, and now it's at 19 billion. And I think that this is going to continue in the future. We're going to continue to see this acceleration of investors moving their money from GBTC to other spot ETFs. And if the demand doesn't pick up, then that will most likely lead to a lower Bitcoin price in the future. But that all remains to be seen. That's something I'm going to be tracking and following closely. If you guys are interested in hearing some more from me, make sure you check out my X and my threads. It's going to be at the Coin Raptor. And also make sure you subscribe and like, and then also share this video if any of this information has been helpful. I'm Cody the Coin Raptor, and I'll catch you guys on the next video.